Hi, this is Kerry Artak with Wicked Stocks, bringing you your weekly Mag 7 update on our free Wicked Stocks YouTube channel. This is for the week of Monday, February 9th, 2026. I always start with Microsoft, and we'll just mention that we tagged, long-term support last week. We came very close to testing. I'm going to call it a test, definitely inside the 1% zone. This week's channel bottom goes back 4 years, roughly 5 years at 391.95. And I've been mentioning since we tested the resistance area over the summer and in October that you should allow for channel support by some point in 26. And that has happened, 391.95. I'm going to say just the opposite now. Can absorb selling through the year and above which you must allow for the 550s, 580s, and climbing weekly in the coming, we saw this from April to July of last year. I don't see this happening again, but you never know. This one took almost 2 years. So anywhere from 6 months to 2 years, we could find ourselves back into what is now the 550s, 580s, and climbing weekly. That is the big picture. On to Meta. Meta whipsawed last week. We had a buy signal the previous week, closed back below a structure that was basically, I can recreate it right here, this channel top. I don't see that as a tradable level, so I'm not even showing it. But what I do show, we did not close below the previous week's lows, which does provide a more neutral framework. I think you can near-term swing traders buy the 625.46 rising channel bottom. It does come off of this November low, so there is a wave sequence. 625.46, able to contain weekly, possibly monthly selling pressures, and from here we can round up in the weeks to follow. If we do close below 625.46 within a week or two, expect this significant 569.20. This is a channel structure that goes back, you could say February 25, a full year or more, able to contain selling through the second quarter, and from here we can round up into later year. So if we close below 625.46, expect 569.20 within a couple of weeks where we could bottom out through the second quarter. Until then, holding above 625.46, we should continue higher, and I'm going to jump to the next chart and show that yes, we have 716.50. That is our next up pivot, but I will say that holding above 625.46, this channel allows this market to round back up into the 780s, 790s over the next 2 or 3 months. And if we close this week above 716.50 over the next 2 or 3 weeks, where yes, we can double top through March into April, fall away again, it would be a settlement above 796.25. That would signal within another 2 months or so this significant 898.81 long-term channel top. This is a structure we came close to testing back in August, did not. It is an area that can contain annual buying pressures if tested, and would be considered an objective if we close above 796.25. But right now, I would say you're buying the 620s if you're a 2 to 3 month swing trader and holding out for the 780s, 790s. And if we close above 716.50, expect the 780s, 790s by the end of March or sooner. On to Alphabet. This has been a straight up market, a vertical move, a church steeple rally, as I like to call it. Last week was a significant development. A key reversal high. We put out a new all-time high and then proceeded to close back below the previous week's low. This is often a sign of an overextended market, overbought market, inclined to correct, and correct it will, in my opinion, with a settlement this week below 312.26. This newly formed rising channel bottom, based in part on last week's high, can absorb weekly selling pressures. And yes, from here, the market can digest the potentially negative effects of the key reversal high. In other words, we're not destined to fall into the 230s based on last week's key reversal high. But if we do now close below 312.26, I do see the 230s in reach. This was likely just a 2 to 3 month sell-off. If we close below 312.26, it looks pretty ugly for Alphabet. We can continue unwinding and should into the 230s where we could actually place an annual low. Until then, there is nothing to do in Alphabet but be long, stay long, despite last week's key reversal high. Closing below 312.26 basically affirms the validity of last week's key reversal high. Until then, the market can digest it and move higher as we move into March trade. On to Amazon. Amazon broke significant channel support last week, tested what was considered like a 3 to 5 week objective, did that within just a few days, 204.35. Now, I do think there's a very real case to be made that last week's settlement below 228.56 carries with it an ultimate 179.52 objective. And if we close this week below 204.35, we should see 179.52 within 1 to 3 weeks, where we could bottom out through the second quarter and round up again from there. Inside of this 179.52 to 228.56 region is, of course, a pivot point at 204.35. Continued settlements above 204.35 will keep 228.56 in reach potentially this week. I'd say over the next couple of weeks anyway. 228.56 is our ceiling of resistance through March trade into the second quarter, and once again below which I can't say that I expect 179.52, but I think you can anticipate it as a possible objective that becomes a clear-cut target following a settlement below 204.35. 228.56 is really, at this point in time, the beginning of a range of resistance into the low 240s, or mid 240s, I should say. 245.07 is a newly formed descending channel top, and you've got 228.56 as this former channel bottom. This area can absorb buying through March into April, and from here we can fall back once again into what is now 179.52 over the next couple of months, over the next couple of weeks, perhaps with a settlement below 204.35. It would be, last thing I'm going to say about Amazon, a settlement in the coming weeks above 245.07 that would reverse momentum into the second quarter. The following, I'm going to say 2 to 3 months, likely to then yield 278.87. This longer-term 3-year channel top, able to contain buying on a quarterly, possibly annual basis. On to Apple. Apple we cover every single week in our paid subscription at wickedstocks.com, so I don't get into it deeply. The video that we put out every week is 8 to 10 minutes long. 286.14, still long-term 5-year channel resistance, able to contain annual highs. And once tested, we can fall into the 210s over the following 2 to 3 months or so. If we do close above 286.14, you should add a 1% margin to that. Then we set up a long-term buy signal that should, over the next year or two, reach the 380. So 286.14, still a significant pivot point through the rest of the year. In our weekly analysis at wickedstocks.com, we get into the 3 to 5 week, even the 2 to 3 week swing trade scenarios. We provide support levels on the way down that you can trade off of. We also provide near-term targets with a settlement above 286.14, but this is broad brushstroke, and I'm going to leave it at that. On to Tesla. Tesla sold off last week, spent some days below this channel bottom, but came barreling back on Friday to close pretty much at the 411.84 channel bottom. We could go either way from here. If we do close this week below 411.84, I do expect within 2 or 3 months 317.21, where we could bottom out through the second quarter and round up again into later year. If we close above 411.84, this is still a market that can reach 534.31 over the next 2 to 3 to 5 months. So 411.84 remains a significant pivot point. Now, of course, you can watch your Tesla analysis every single day on our YouTube channel. So it's also free, and I'm just kind of painting kind of the big picture here for Tesla. NVIDIA, we cover every single day at our wickedstocks.com subscription platform. We had it every single day for free, as you may remember, on YouTube. Now we have rolled it into our daily SPY or daily QQQ analysis that you can access at wickedstocks.com. But this is broad brushstroke right here. Low 170s, 172.70 channel support, able to contain selling through the rest of February. 194.78 channel resistance, able to contain buying through the rest of February. We could trade inside of this zone for the next 3 to 5 weeks. But if we close above 194.78, buy signal into March, April, then expecting within a month or two, this rising channel bottom at 212.30, this zone really 219 to 228 becomes a 2 to 3 month objective if we close above 194.78. Inversely, if we close below 172.70, we have a 2 to 3 month sell signal down to 130.88. This is a longer term channel bottom that can contain selling through the rest of the year, and above which our 3-year trend remains clearly bullish, in NVIDIA. And finally, Palantir, not part of the Mag 7, but we provide updates in it as well. We had a sell signal, as you may recall, 3 weeks ago with the open below this channel bottom, now at 180.55. Our objective is the descending channel bottom this week at 132.75 that we obviously tested last week. And I'm calling this a range of support down to 125.41. That is the February 25 high. This area able to contain selling through March. And from here, we can round up into the 180s roughly over the next, present volatility, 2 to 3 weeks. Could take the better part of 2 months. If, however, we were to close this week below 125.41, I do see this base, this double bottom, roughly 63.40 to 66.12 as a 2 to 3 month likelihood with a settlement this week below 125.41. Until then, this is bottom picking territory, as I've been mentioning, and from here we can push into the 180s over the next 3 to 5 weeks. I will show that 180.85 is part of a new range of resistance, descending channel top at 186.64. This area can absorb buying on a monthly basis, and we can fall away again. And if we were in the coming weeks to close above 186.64, that is an aggressive up pivot into the second quarter. We'll provide the details of those targets were that to occur, of course, on a week-by-week basis. I'm going to leave it at that. Please click like, share, subscribe, and check out wickedstocks.com. I'll be back with next week's Mag 7. You have a great week.